I think financial institutions with some reputation need to be very careful about guarding their reputation. We have a Dutch saying, interestingly, which says reputation comes by foot and leaves by a horse.
Hello and welcome to this week's Tea Break. I'm Al-Enazi, joined as always by my co-host Yuri. Today we're thrilled to be speaking with Erik Vrij, Head of Legal at First Abu Dhabi Bank. Erik, how are you?
I'm very good, thank you very much for having me.
And what tea have you gone for?
I took the green tea, it matches my jacket and I like it as well. So.
Fantastic. Yuri?
Well, I've gone for the traditional English breakfast tea from the FT canteen today, Ali. And I was wondering, in your books, because you're quite a prolific author in your spare time, Erik, the villains and the victims of the financial services frauds that you're writing about, what do they drink during their day in the office?
So the villains drink financial blood of their victims, essentially. So it's actually quite close to reality. So there is one story called Specula. Specula is based on Dracula the vampire, and it's based on Theranos, the blood testing company. And I've turned Specula into like a Romanian company that is a hedge fund investing in red gold, which is blood, and they do abusive things with it. And here it comes the drink. At the end of their annual general meeting, they serve a very rare and red wine. And I will not say more about that.
Well, I must apologise to our Romanian viewers.
Dracula was Romanian, this one had to be Romanian. And the victims, by the way, they drink breakfast tea invariably. So.
Right, so I'm a victim drinking the breakfast tea.
That's very fascinating how you bring all these things together, Erik.
Yeah.
And of course, Erik, you're based in the Middle East, a place where I'm from, and we have this thing where we usually, gather together over a cup of tea. We have this opinion piece from Saqib Alim, a partner and lawyer at Morrison Foster in London. And he's saying that despite the local and the regional nature of disputes in the Middle East, the Qatari princes or the Riyadh royals will always settle their family squabbles in the London courts.
Yeah. So on the legal side, it's a very dominant choice of law governing law and finance contracts. English law, you will see it all over the place, particularly in cross-border transactions. It's actually an export product, believe it or not. In Dubai International Financial Center and Abu Dhabi Global Markets, it is the governing law in that center. You can drive into that center and you have a different jurisdiction. And they have English court judges, believe it or not. They are actually hiring those to do justice to any disputes.
And many of these disputes, Erik, they're cross-generational disputes between different cohorts of investors, family members. And we've been writing a lot about this 100 trillion great wealth transfer. And our colleague Elisa, in particular, she's been writing about the reluctant inheritors. People who are, they're taking on the responsibilities, the wealth of the family, but they're not necessarily prepared to do that. And they can be too anxious to do that. And it's fast emerging that this human capital is perhaps the most important investment.
I'm not sure if it's unique to the Gulf. I think it happens in every family that you will have the people that are not prepared. What I do actually see a lot of success stories as well in family businesses. It's a very high percentage of business that is family run in the Gulf. There's lots of investments in education. And what I think is good to distinguish is that ownership is not necessarily the same as the management of the business. So you see lots of expats, lots of other people that are being hired from wherever in order to fill the skill set that is needed to manage either the business or the wealth. And I think that's something which probably is more present in the Gulf region than elsewhere, the outsourcing element and the management of the assets.
One of the institutions you've been focusing on, the Swiss bank, family-owned bank, and I worry about the Swiss allusions in this book you have here, Erik, but is Pictet.
Yeah.
And they're very interested in that legacy and how that's passed on over the generations. And what sort of investments and projects are they focusing on?
Well, we're discussing philanthropy, and they told me that philanthropy is entering a new era, with wealthy donors, shifting focus from traditional causes to global risks like climate change, AI, and misinformation. And of course, Pictet are seeing a rise in demand for strategic giving advice. Younger philanthropists seek impact from the outset, blending business, investment and purpose across generations. And Erik, there's certainly a history of previously unethical tycoons and oligarchs turning to philanthropic ventures in order to clean up, their reputations. How do you advise potential clients who come to you with this goal?
Well, I think financial institutions with some reputation need to be very careful about guarding their reputation. We have a Dutch saying, interestingly, which says, reputation comes by foot and leaves by horse. You can lose it very quickly. So you have to be very mindful about that. I would not easily entertain it if I were them. Again, ironically, I have a story in there which is inspired by the Giving Pledge, the Bill Gates foundation that gathers money and makes billionaires commit to leaving their fortune for charity purposes. And the exact tension that you're now describing, like this person comes in with a commitment to pledge, but he's in fact after publicity, he's in fact after networking with the other people, the wrong incentives, and the tension around how to deal with that. On the one hand, you want to pull them in for the good cause. On the other hand, you see the ulterior motives that are not really aligned with the foundation. It's an interesting tension to handle.
Mm-hmm. And you've also been writing about families who are keen to invest in technology. What have you found there?
Well, I had the pleasure of interviewing Kunal Nayyar, who is one of Hollywood's best paid actors, a star of The Big Bang Theory.
Leonard, Howard, and I'm sorry, what was your name again?
In real life, Kunal started up his own business and has been inventing apps. And the first one of these looks at documenting all of the family's essential information in one safe and secure hub, and also transmitting the family legacy through this hub. And Kunal was saying to me that this is the start of the nerd world, that, as he calls it. He was saying the frat boys of old who ran the banks and asset managers, they're now taking a back seat. And I wanted to ask you, do you feel that these new style firms will be taking over from the traditional wealth and asset managers?
I think there's a bit of hype around that, but it is happening, right? I think some use cases that are heavily technology driven, where technology can be an important disruptive factor, are taking over already and have already taken over some use cases of the traditional old school banks. You see that some tech companies are also sort of going for the banking license. But what I feel from the sideline is that it tends to be limited use cases, mostly in the payment space. There's some other spaces as well. I think there's lots of complexity, things that have to be licensed, capital intense, expertise intense, that are not easily, let's say, disrupted by just a technology app. So that's one thing where I don't see they are going to take it over. On the other hand, there's also the traditional old banks that are becoming new banks, and they're focusing on the new activities. They are buying up startups, they're incubating startups, they're developing these technologies themselves. And they could actually also do it the other way around. So what I think is happening is that they are merging together, basically. One becomes more of the other, and the other becomes more of the tech company, if you like.
Discussing the purpose of wealth is vital, but many investors are still not doing that. And we have this opinion piece from Liam Crane and David Cohen, who have a real estate fund, investing in opportunity zones in Florida, in the US. Are wealth managers actually any good at mobilizing private money for socially beneficial causes such as housing or infrastructure projects?
Traditionally, I think asset managers are based on, they're compensated based on assets under management or revenue growth or these like financial criteria. I think if you look at it compared to charities, that's a different, I mean, these people are more driven by other factors than, let's say, the bottom line, the fees that they generate, for example. I think you need that kind of attitude maybe to be more successful, or to have a good taxonomy and a good incentive scheme. Again, maybe there's one interesting book I'm trying to read, writing, which is I'm turning the Netherlands into a first exchange-listed country. and it's after the maximum happiness for the largest number of people. So that's also an incentive. And how are you going to achieve that?
I think, Ali, that matches with our aims at PWM of creating the maximum happiness and avoiding the horror stories at the same time.
But it'll be interesting to see how Erik would fit in PWM in the stories, and how we would fit in there, and where our place is in one of his stories.
Are we the heroes or the villains?
Exactly.
Yeah.
Erik, thank you so much for joining us.
My pleasure. Great to be here. Thank you.
That's all from us this week. You can find this episode or all our others on the PWM website or over on our YouTube channel. If you've got questions for our guests or want to dig deeper into the conversation, you'll find everything you need online. See you next week.